Imagine one person with one sale triggering a market crash that wipes out $500 million in just a few minutes. Well, it happened. We're going to break down how, and more importantly, how you, could potentially see the next one coming. $2.7 billion. That's the value of 24,000 Bitcoin that a single crypto whale dumped on the market back in August of 2023. I mean, talk about a massive move. It sent absolute shockwaves through everything.
And the fallout? Oh, it was immediate, and it was brutal. That one sale triggered a catastrophic drop, liquidating over $500 million in leveraged positions. For thousands of investors, poof, wiped out. But here's the thing. For anyone who saw it coming, it wasn't a disaster. It was an opportunity.
So that's the multi-billion-dollar question, isn't it? What if you weren't just reacting to the price charts after the fact? What if you could see the moves that make the news before they even happen? Now, that's where this gets really, really interesting.
So let's talk about the shocking power of these whales. I mean, these massive players, they can shift the entire market on a whim. And usually, their moves are totally invisible. Until it's way too late. But that's starting to change. There's a new tool in the game, and it's basically giving us a way to peek behind the curtain. And that tool? It's artificial intelligence. Look, AI can do something no human ever could. It can sift through this insane mountain of on-chain data in real time. It's like having a superhuman detective that spots the patterns, flags the weird stuff, and basically raises a red flag that a whale is about to do something big.
Okay, so let's get into our first section, AI as the first radar. You're probably thinking, okay, great, but how does this actually work? Well, the first and honestly, the simplest way to use AI for this is to think of it just like a radar system. You're just looking for that first little blip on the screen.
This basic technique is called filtering. It's super straightforward. You're basically training an AI model to just watch the blockchain. And the second it sees a transaction that's bigger than a certain amount, let's say any Ether transfer over $1 million, it metaphorically screams, hey, look at this. It's your fundamental first-level alert system.
And the cool part is, this isn't some crazy science fiction stuff. It's actually pretty accessible. To break it down, you just sign up with a blockchain API provider, get yourself an API key, and then you set the rules. You could say, hey, tell me about any transaction over $1 million. Then you set up a little listener function that scans the new blocks and pings you when it finds something. And bam, just like that, you've got your own personal whale watching station. And this is the key. This is the big takeaway from this first step. You're no longer just staring at price charts and reacting to what's already happened. You're observing the very transactions that create those charts. It's a total game changer, shifting you from reactive to proactive. All right, time to start mapping the whale's mind. Because let's be real, it's not always going to be that easy. The really smart whales, they know people are watching. So they're not just going to dump $1 billion in one obvious transaction. No, they get sneaky. They get creative. And that's where we have to level up our game too.
Yeah, exactly. But what if the whale is sophisticated? What if they try to hide? I mean, what happens when they start covering their tracks, splitting their money up across, dozens or even hundreds of wallets just to fly under the radar? How in the world do you track a ghost?
This is really the difference between spotting a giant oil tanker and trying to track a silent submarine. Simple filtering, that's great for catching the big, obvious, slow-moving tanker. But behavioral analysis, that's for finding the submarine. It's about uncovering the complex strategies, the moves that are designed to be hidden.
So, our first tool for this deep dive is something called graph analysis. The best way to picture it is like one of those detective shows, the corkboard with all the photos and red strings connecting them. That's exactly what the AI is doing. Every wallet is a node, that's a photo, and every transaction is a link, that's the string. The AI builds this massive web to figure out which wallets are all part of the same crew, even if they've never directly sent money to each other.
Okay, next up, we've got clustering. Now, this is where the AI starts to get really smart. It literally just starts grouping wallets together based on their behavior, how they act. The amazing thing is, the model doesn't even know what a whale is. It just learns to spot patterns. It'll see a bunch of wallets doing the same thing, like slowly buying up a token, and it goes, hey, these guys are a team. It learns to identify that whale-like activity.
And this is what you get out of it. The AI starts creating these awesome behavioral labels. All of a sudden, you're not just staring at a list of random wallet addresses. Nope.
You're seeing groups labeled long-term accumulators or exchange inflow distributors or even DeFi exit planners. It turns a sea of meaningless data into actual, actionable intelligence. So let's recap. We can spot the big, simple moves with filtering. We can uncover the sneaky, complex strategies with analysis. The last piece of the puzzle is putting it all together. This is how you go from just watching to becoming a crypto oracle, building a seriously powerful predictive toolkit. And this is where we zoom out a bit. We go beyond just tracking wallets and start trying to read the entire market's heartbeat. We pull in these advanced on-chain metrics, like SOPR, which basically tells you if people are selling at a profit or a loss, a huge clue about market confidence. Or exchange inflow/outflow, are whales moving coins onto exchanges? Because that's a classic sign they're getting ready to sell. Each one of these is another critical piece of the signal.
So here's the 4-step plan to build your own system. First, you collect all that data from APIs like Dune or Nansen. Second, you train your models to do that clustering and pattern recognition we talked about. Step 3, you get even smarter by adding in sentiment analysis. What are people saying on social media? What's the news saying? This helps you understand the why. And the final step, you automate the whole thing. Set up alerts, maybe even trading bots to act on what you found.
And that's the holy grail right there. A multi-layered view. You're not just reacting to one little blip on the radar anymore. You're seeing the whole story unfold. You're watching a combination of different signals all line up, which lets you see a major market move building in its early stages with so much more clarity, way before the rest of the world sees it on the price charts.
You know, tools like this are becoming more and more accessible every single day. And that leaves us with one final really big question. Is AI a tool that's going to level the playing field for everyone? Or is it just a new, more powerful weapon in the hands of the few? The answer to that is probably going to define the next chapter of crypto.